Nigeria's central bank chief says issues around MTN alleged illegal repatriation of funds soon to be resolved. And the IMF sees 8.5% growth expansion for Ethiopia in the 2018-2019 period, while Somalia gets its first World Bank support of $80 million in 30 years. It's Thursday, September the 27th, and this is your Business Incorporated with me, Boston Nomofaye. Let's go straight to the markets now, starting from here in Nigeria, where the all-share index is trading water by 0.7% in the final 48 hours to the end of the month. In South Africa, the GSE was also seeing red of about 0.6% at lunchtime in Lagos, despite the breather at the emerging markets, while the EGX30, that's the Egyptian Stock Exchange, was in positive territory by 0.2%. The Kenyan market posted a recovery of 0.7% on Wednesday. In the Middle East, many of the exchanges were showing green shoots on Wednesday. The Dubai Financial Markets Index jumps nearly 2% in the afternoon, while the Abu Dhabi Index reading was a shy of 5,000 index reading. The Qatar Stock Exchange was about 0.5% in the positive territory, but the Saudi Arabia's Tadawul index was a bit weaker than the rest. That's there at the bottom of the page on your screen. Meantime, European stocks are under pressure this Thursday, led largely by the Italian FTSE MIB in Milan, down about 1.25%. That's about 12:30 Nigerian time. The Stoxx 600 of pan-European big stocks was also in negative territory on account of news and events around the world. So let's chew a bit of this together with Paul Stiglitz, who is joining us live now from the Stock Exchange in Frankfurt. He's telling us more about this. Headlines rocking the markets today. Paul, good afternoon. It's good to see you. How's the market reacting to the Fed rate hike of Wednesday? And is the Fed moving too fast with up to 3 hikes and a rate of 3% in 2019?
The reactions to the Fed rate hike that happened on Wednesday weren't unexpected, or the hike wasn't unexpected, so that didn't move markets too much. But the guidance that did move markets indeed, and the reactions have been very mixed, very broad spectrum. Everything from 3 rate hikes in the next year is completely absurd. There is no indication that inflation is going to go up that much, to there's absolutely no alternative to raising rates right now as long as jobs continue to grow. So wide spectrum. Jerome Powell himself said that the outcome of trade conflicts is still unforeseeable, so that is not part of the decision. How did it go down on the markets? Not that great. Wall Street closed yesterday with all major indices down. The S&P 500 lost after the news when it had previously been positive. In Europe this morning, when markets opened, they were down. The FTSE lost, the DAX did as well. But as you can see behind me, it has recovered some ground during the day. Now, is the Fed moving too fast with an aim of 3 or even 3.4%? If you look at it in perspective, the interest rate wouldn't really be that high. It wouldn't be higher. It wouldn't even be as high as it was before the financial crisis. And what this does is it gives the U.S. Central Bank a tool to counter possible problems. There's been a huge bull market run for a long time, growth for almost 9 years now, and it's going to end at some point. With interest rates high, the Fed can now pull this once a crash could happen and say, hey, you know, we're going to take some of that back and ease markets, whereas the European Central Bank, for example, with still historically low interest rates, could not pull that.
But let's shift gear a little bit to your market in Europe, talking about Italy and its delayed budget. The real question is the real sick man of Europe sick again?
Well, the wrestling continues in Italy. It's a big mess apparently still. The deficit is supposed to come out, and what the government should be signaling is that there's a firm stance. There will be a deficit, but that it shouldn't be too much. Instead, we're getting rumors of the economy minister resigning. Then that's taken back. No, he is staying indeed. But investors are worried, certainly. The bond market crashed up to 22 basis points at one time upon the worries that the meeting about the deficit might be postponed. The Italian Borsa Milano, you mentioned it, was down today as well. Italy is already in a lot of debt. And I think it is the second largest debt behind Greece in the Eurozone. And the government coalition of the Five Star Movement and the League, they're planning a lot of spending on social reforms. They want a basic income for everyone, and tax cuts, a general flat tax rates for businesses. All of that is going to cost around 90 billion euros, and there is worry that the country is not going to be handling that well.
Quite a lot there. Well, you have from Italy to Turkey. Things are looking a bit troubling for Turkey as well. So what is President Erdogan looking for in Berlin, Germany? Is he looking for new friends in today's chaotic world of geopolitical and trade disorder?
Erdogan is visiting Berlin currently, and the two countries have had very strong economic ties. So it's not that much about new friends, it's more about trying to keep the old friends Erdogan has, or the country has. Because much of the business problems that Turkey has are actually political problems. Only about two years ago, Erdogan was insulting German politicians, especially Angela Merkel, as a fascist. Now he's coming back, trying to smooth things out, because the lira and thus the economy is in a dire situation. The lira has lost about 40% of its value this year. And the economy, the Turkish economy, is very much dependent on foreign investments. But foreign investors are scared, of course, with this lira drop and the political uncertainty, that it won't make much sense to invest in the country. Two examples: the German energy company EWE has been considering to quit the market, according to an investment agency. And the MediaMarkt business group that was planning to expand has delayed those expansion plans. Now, what Erdogan needs to do is mend the ties in order to show that there's at least a little bit of political stability. We'll see if he can keep his mouth shut with dangerous remarks.
Paul, let's check in together tomorrow to wrap up the current trading week. And the month of September, we have that privilege tomorrow, don't we? Paul Christian Brice, have a great day of DWTV for Channel